Hey traders, Nick Shaheen here, revisiting Bitcoin. Wow, right? Whoa. So there are a lot of haters out there. Caveat, I am not a lover of Bitcoin. I'm just realistic and I'm agnostic. I don't hold any positions in it. I have traded stocks that track it, but I don't own any coin. So the opinion is unbiased. I have debated it with my immediate family, and they roll their eyes when I mention it because for some reason they have a mental block against the concept. It's very simple. I'll just state it the way I understand it, and it's fact actually. Gold. People love gold and pay a lot of money for it because they choose to. It has no value other than that. It's rare, so it makes it hard to get. So once you get it, because everybody loves it, there are countries of like 3 billion people that absolutely adore it. So demand is high and supply is low. Perception creates value. Period. End of story. That's the story of gold. It didn't come out valuable. It's not descended as valuable. We choose to make it valuable. Same with fiat money. Like the US currency is not backed by anything except by our faith in it, or the world's faith in it. The minute we decide it's garbage, it would lose its value. Same with Bitcoin. There are enough people in the world that absolutely love it, or at least want to own it because of their perception that it has value. Therefore, it has value. It's actual cash value. What is somebody willing to pay for it? That's the value of it. Very simple concept. If you're shorting it because you think it's fraud, I don't know your logic. Fraud to what? Somebody loves something and they're willing to pay for it. Would you buy it and hold it to hand it to them later in the future for more than what you pay it for? Sure, it could be a pile of poop. I don't care. So it's just that. It's an asset that enough people like that it creates value because it's rare. It is rare. So people didn't think that this was going to come back. Most people. If you watch my last video on it, you probably thought I was crazy because I said 16,000 is coming, if not a new high. I calculated somewhere in the middle of the 17,000. You can watch my video. I'll put a link to it at the end. And I actually drew the line. I calculated based on prior performance. And the lines were kind of like this, only TradingView took a poop on me, and I lost the updates of the lines. So my initial setting was here, but in my video, I drew it all the way up to 17 and change. I can't remember exactly where. You can watch the video. But my point was, don't short it, because on the breakout, especially on the weekly charts, it said it's possible for it to hit a new high, and it came pretty darn close. I mean, this is incredible. That's a lot of money for one fake quote unquote coin, right? So it's not fake, it's there. It's represented by a bunch of numbers, whatever it is. It doesn't matter. It could be a rock in the ground, a hunk of metal from the ground, a bill, a green bill with digits on it. It doesn't matter how you represent the value. People want it for whatever it's trading at. That's it. Don't overthink it. So now it comes down to trading it on the chart. I've never been wrong on this because I have no perceived opinion on it. So I just look at the charts and I say, this can happen, wait for the breakout and chase it. That can happen, wait for the breakdown and chase it. Buy the dip because it's falling into support. These decisions make it easy to trade this asset. So this is a weekly chart. It just zooms out and shows you where the points of interest are. And in this case, they're pretty simple. So do I get long? That's probably the question. I was like, what the hell is he talking about here? Do we get long? This is never an obvious point of entry for anybody. So sure, you can get long, but what's your time frame? 10 years? Yes, get long. It's not going to matter much. If you're like me, you want to get in right on the stock, this is not an obvious point of entry. You clearly missed it. The breakout was somewhere around here. Depends on the how quickly of a trader you are. In fact, the inverse head and shoulders were somewhere around here. The upside target was about this much, the length of this up here. But if you think about it on a weekly basis, you can probably draw something from here, and the upside is way above current price. So all depends on you. For me, I would rather see a dip. Everybody loves it now. Everybody loves it. So let's wait for a dip. Why not wait for a dip? How far down depends on the time frame. Ideally, I want to catch it back at the neckline. So if I consider the first neckline being at 14,000, I want it to be at 14,000. I know the lovers of Bitcoin now are cussing me out, flipping me off, calling me all kinds of names. But this is good news for you if you love Bitcoin, because you want it to come down, come back up, and now we're outside the range. Come back up and reattack the neckline from which it just failed. And then look at the size of this cup and handle it's drawing. You can't just go to the moon. You have to fall back, shake some weak hands, transfer ownership into some better hands, fall against support, build a better base, and break out again, and repeat the process. That's how you have higher lows attacking necklines, one after another. This was a major failing point. This was a major failing point. This arguably was a major failing point. This will be a major failing point. And you just take them out one after another. But you just can't. Why wish for this? Then you create a very steep wedge that is subject to or susceptible to quick drawdowns. Fall a little bit, well, a little bit. In this case, it's a lot of it, but it's just rallied a lot. So if you consider from here on up, what is that, 50, 60%? So giving back 20, 30% is not a big deal. Ideally, I want to come back and visit the neckline. The neckline to me was like 12. So I would settle for 13, 14. These are like $1,000 ranges, but that's how it moves. So you can't be surgical with it. Well, at least I can't. And so far, it served me to be a crayon guy with this, with Bitcoin, because it moves so big. And the crayon serves me better than fine, 0.5 point. So number one thing, I shouldn't be stubborn. The number two thing, just treat it like a regular chart and trade the ticks and the levels as opposed to the concept and your perceived opinion of it. Who cares if it's good or bad? I rarely trade a stock because I love it or hate it. I used to not like Tesla, but I rarely shorted it. I always went long on dips. Let's see what other stocks I dislike, and I only trade them on the long side. Anyway, so Tesla comes to mind in the beginning, first and foremost. So leave the emotions at the door. Let somebody else be passionate about it. If you're in it to trade successfully, it's easier to look at the chart and take the emotions out of it. In this case, if I'm not long Bitcoin, I should admit to myself I probably missed it. So this is a weekly chart. Look at this week, not last week, the week before that, and draw a box around it. That's probably actionable area. What does it mean? They rallied to the moon that week, and then they fell pretty quickly. So if anything, that's a zone they're willing to play with. So I watch the edges of it. So if this rally continues on to the top, I don't start longs at the top. I wait for the breakout. So if I were to chase a rally, I would say open air, even though it's not really. There's still a few ticks up there with one last fail. Like if I look here, there is one last fail above it, but is it going to matter? It's been years. So I don't think it'll matter. If they can break away from 2 weeks ago's high, I think they go. If they come down to the low, I think they might try to hold. So if I'm an active trader and I want to buy into a free fall, I would probably try to catch it there with a tight stop, because really, like I told you, I want it somewhere around 14, 13. So split the difference somewhere here. So this is where I'd like it. I'm not calling for it. I'm just telling you how I would trade it. It doesn't have to be that I chase every breakout. If I miss the breakout, I should just let it go, so I don't buy into somebody else's profits too late. Again, this probably upset a few people, but it's an emotional subject, and it's easy to get wrapped up and get the FOMO. The fear of missing out works both ways. On the way up, it's everybody wants to come in, and they delay and they come in at the wrong time. on the way down, the fear of a free fall keeps you out too long. So if you knew the charts and you had some actionable level on it, then you'd be more confident. Like if it falls to 12,000, I'd be very confident catching the falling knife, like very confident, because it is a very clear pivot line zone. Again, it's not a line, and I'm going to extend it out there. And it'll show it. They fought over it for super long. They've had a lot of action below it, and they're trying to establish some action above it. So they're going to come back to it. They'll fight it over. It's the value area high level. So everything below it is where they've traded the most from the volume profile. Those are the bars on the left. They're very valuable information. They show me where all that action happened. So it's a well-consolidated zone. It should provide support. It's not a hard line in the sand. It's more like a very firm mattress at this point. All right, next signing out.